Hello and welcome. I'm Dr. Kimberly Dawn Ray, and I'm here with Ray. Today, we're talking about something that can feel very personal and sometimes a little intimidating: how people think about health, longevity, and financial security as they get older. More specifically, we're looking at home equity, reverse mortgages, life insurance, and the idea some people call infinite banking. And Ray, I'm glad we're doing this in a calm, plain English way, because these topics can get complicated fast.
Absolutely. And let's set the tone right away. This is education, not pressure. We're not here to rush anybody into a decision. We're here to make the language clearer, make the moving parts easier to follow, and maybe lower the temperature a little. Because once words like equity, insurance, or financing systems start flying around, people can feel like they missed a memo somewhere. They didn't. The terminology is just dense.
Yes, and when people are making decisions later in life, dignity matters, clarity matters, feeling safe enough to ask basic questions matters. I work from the belief that our elders deserve to understand their options without being talked down to and without being pushed.
That's a big one for me, too. The best guidance usually sounds less like a sales pitch and more like, here's how this works. Here's what it may help with. Here are the limits. And here's what would need to be reviewed before anybody could say what actually fits your situation.
Exactly. So let's begin with shared framing. A lot of these tools are really about flexibility. Some people want more breathing room in retirement. Some want to protect family. Some want better control over cash flow. Some want all three. And the truth is, the right conversation starts with goals, not products.
Short version: don't start with a hammer, start with the house you're trying to build. That's not my cleanest analogy, but you get me. If the goal is retirement flexibility, home equity might be part of the conversation. If the goal is family protection plus long term asset building, life insurance might come into focus. If the goal is control over how capital is accessed, that's where properly structured whole life and the so called infinite banking conversation tends to show up.
And for anyone listening who has felt overwhelmed before, please hear this. You do not need to know all the jargon to have a smart conversation. You can start with very simple questions. What do I own? What do I owe? What kind of monthly strain am I trying to reduce? What do I want to leave behind? Those questions are powerful.
They really are. And I'll add one more because I'm a numbers person and I can't help myself. What assumptions are we using? Because estimates matter, but estimates are still estimates. A calculator can be useful, a projection can be helpful, but an estimate is not the same thing as an official proposal.
That distinction builds trust. It says, we respect reality. And when people feel respected, they can breathe, they can think clearly. That's the kind of conversation we want today.
So here's the roadmap. First, we'll simplify home equity and reverse mortgages. Then we'll move into life insurance as more than just a death benefit. And from there, we'll touch on infinite banking, which is really a strategy conversation around properly structured whole life policies. Clean and simple.
Beautiful. Let's do it. Let's start with home equity. In plain language, home equity is the portion of your home's value that is yours, after accounting for what is still owed on the mortgage. For many older adults, that equity can become one of the biggest financial resources they have. But a lot of people are equity rich and cash flow tight. They have value in the home, yet not enough flexibility in monthly life.
Right, and that is exactly why reverse mortgages come up in retirement planning conversations. At a very basic level, a reverse mortgage is a way to unlock home equity for retirement flexibility. The messaging I always come back to is practical. What does this do for cash flow, for housing stability, and for options? Because that's what people actually live with day to day.
And one of the reasons people even consider it is that they may be able to access funds without giving up ownership. That matters emotionally. Home is not just an asset on paper. It's memories, it's familiarity, it's often identity.
Yes, and the language around that should be careful and precise. A reverse mortgage review often looks at things like preserving title and occupancy, income supplementation strategy, FHA insured program review, and retirement cash flow modeling. Those phrases sound technical, but the heart of it is simple. Can this home help support retirement in a manageable way?
And it's important to say that numbers depend on real world details: age, home value, existing payoff, rates, fees, and other factors all matter. So if someone sees an estimate online, that can be a starting point, but it is not the whole story.
Exactly. This is where my compliance brain wakes right up. An estimate is helpful, but it's still only an estimate. Actual appraised value, actual payoff, third party fees, credit and income determinations, and other variables can change the picture. I know that sounds dry, but naming the limits is part of being honest.
No, I actually love that. It keeps expectations grounded, and grounded people make better decisions. Now, let's move gently into life insurance, because this is another area where many people only hear one version of the story.
Right. Most people hear life insurance and think only of a death benefit. But one of the clearest lines in this space is that life insurance can be more than a death benefit. Depending on the type of policy and how it's structured, it may also function as a compounding asset or as part of a tax efficient strategy. Again, not every policy works that way. Structure matters.
That's such an important point. A person should not hear one phrase online and assume every policy does the same thing. But when it is properly designed, life insurance may offer family protection while also building assets in a tax advantaged or tax conscious way. And for some families, that combination feels deeply meaningful.
It does. Protection plus access plus long term planning, that's the appeal. Then we get to the phrase infinite banking, which can sound mysterious or honestly a little too slick if it's explained badly. The clean version is this: people use properly structured whole life policies to create what some describe as a personal financing system.
Meaning they are trying to create a source of capital they can access on their terms within the rules of the policy.
Yes, the phrase I've seen used is controlled capital reservoir. Fancy words, but the idea is control and liquidity. Not magic, not free money, not a shortcut, a strategy. And if someone is exploring it, the better questions are: how is the policy structured? What are the trade offs? What is the timeline? And what role is this supposed to play in the bigger plan?
I'm glad you said bigger plan, because that keeps everything in perspective. None of these tools should be discussed in isolation. A reverse mortgage is not just about the house. Life insurance is not just about the policy. Infinite banking is not just about one concept. These are pieces of a larger conversation about freedom, security, and legacy.
And that larger conversation should feel human. It should sound like, tell me what you want your retirement to feel like, or what pressure are you trying to reduce, or what do you want your family protected from? Those answers drive the strategy more than any buzzword ever will.
Yes, and when the conversation is done well, people leave feeling clearer, not cornered. So, as we wrap up, I want to come back to the heart of this. Financial decisions, especially later in life, should protect dignity, they should create clarity, and they should be approached with care. If someone is exploring home equity, a reverse mortgage, life insurance, or an infinite banking strategy, they deserve complete sentences, honest answers, and enough time to think.
That's beautifully put. I'd frame it this way: good guidance is structured, transparent, and calm. It explains the potential benefit, the mechanics, the limits, and the next step. It does not hide uncertainty. It does not skip over what still needs to be reviewed. And it definitely does not pressure somebody into acting before they understand what they're hearing.
Yes, no pressure, no obligation, just clear information tailored to the person's situation. I think that matters so much because people can feel shame around money questions. They think they should already know this, but there is no shame in learning. There is wisdom in slowing down and asking for clarity.
And honestly, asking good questions is a sign of strength. If anything, the people I worry about most are the ones who never ask a follow up, because these are not trivial decisions. If you're reviewing a reverse mortgage, you want the real numbers. If you're looking at life insurance as an asset tool, you want to understand the structure. If you're curious about infinite banking, you want the strategy explained without hype.
That's the spirit of this whole conversation: calm, informed, and human. And I hope anyone listening today feels more comfortable starting that conversation, whether it is for yourself, your parents, or your family's future.
Same here. Start with the goal, review the facts, respect the limits of estimates, then move to an official review if it makes sense. That sequence is boring in the best possible way. It keeps people safe.
Boring in the best possible way is actually a wonderful standard for financial decisions. I may borrow that.
Please do. I've got a whole collection of glamorous lines like that. But seriously, this was a good one.
It was. Thank you, Ray. And thank you to everyone listening. We'll keep bringing you conversations that help make important topics feel clearer and more approachable.
Thanks for spending time with us. Take care of yourselves, take care of the people you love, and we'll talk again soon.
Bye for now, Ray.
Bye, Kimberly.